Good afternoon, this is Clark Neighbors with BIS Commodities for the market recap for the last day of November of 2014. Very interesting day, and we'll get to that in just a minute. Here's kind of a recap of what the market has done in the last month and also the last week. First starting with the last week. March corn is actually up 4 cents on the week. January beans down 25 cents. While the March wheat was up 25 cents. For the month, corn absolutely unchanged for the month of November. January beans down 35 cents, while March wheat was up 32 cents. And if you look at the market off of those late September lows, corn is up roughly 60 cents. Beans are still up about $1.25, and wheat's up 95 cents. So pretty solid gains yet throughout the early stage of this marketing year. And keep in mind, we're 1/4 of the way through the current marketing year as far as the grains are concerned. The crude market, which is the storyline today, down $13 for the month. Keep in mind, crude in late June was $107 a barrel, and as we speak at this moment, we're down to around $67, $68 a barrel, down about 35%. Keep in mind, it'll be interesting looking at the commitment to traders report this coming Monday to see how long the funds really are. Now, what collapsed the crude market today in being down well over $5, unleaded gas down 10-11 cents plus today, was yesterday on Thanksgiving. OPEC had a meeting, and due to pressure from the Saudis, etc., decided not to cut production. A lot of talk about production cuts because of the falling crude prices and production costs, depending on where you're at. This will also bring in a lot of conversation about what the value of production is in here in the U.S. With the fracking industry and so on going forward. So that is going to be interesting. And what was also interesting this morning when the grains opened at 8:30, they were pretty resilient considering what was going on in the crude and how that was affecting a lot of the other commodities. Looking back to years past, in the last several years, when we've seen a very strong correlation with the energies and many of the other commodities, it was surprising not to see grains down early today. And as the day wore on, you saw some of that pressure, at least in the soybean complex, to some degree in the corn. And wheat was higher, and some of that is due to probably this energy play again because of the lowering price of crude. Keep in mind, supposedly about half of Russia's tax revenue comes from energy. It is the largest producer of crude in the world right now. And keep in mind, with this lowering energy trade is having some traumatic impacts. That, along with the Ukrainian situation, many are looking for Russia to go into a recession, maybe a deep recession. Tie that in with wheat and some cold weather and them wanting to hold some commodity in play. One of the Russian wheat ministers mentioned today they may have to put some floating tariff on wheat. So those storylines kind of help keep that wheat market a little more stable today. Wheat and feeder cattle were the only two up markets in the entire commodity complex today that I could see. So that'll be interesting moving forward, and I'll touch on that at the end. Dollar was testing new highs again today. So again, stronger dollar, weaker commodities seem to be the mantra for today. And most of the movement for the entire month of November, as you can see by how these markets changed this week, today, was most of the movement for the past month. So dollar firmer. S&P, as we know, is making or the stock market, I should say, making new all-time highs almost on a daily basis. Jen in our office put a nice thing together for our at a glance. You can see that on our website, and I think we email a lot of that out, showing a price comparison over the last several months between soybeans and crude oil. And there's a very strong correlation from those mid to late summer highs to lows here in the last 30 days, but the bean market's had a nice little bounce where crude continued to see its break. So correlation very strong up till mid to later part of October, about when that meal market took off. Now moving forward, looking at the macro side of these grains, first on soybeans, 2 or 3 things to watch. Obviously, with the meal situation, logistics, trying to get that pipeline filled, is still a situation where it's been relieved a lot, but it's still a talking point. You still have very little carry in any of these bean complexes right now, and obviously have continued inversions in the meal. Exports have been really good in soybeans thus far, and obviously the meal. We did see some good bean sales again this morning. We actually saw net cancellations in meal, but the beans continue to be very good. Sales right now are about 5% ahead of a year ago at this time. And shipments are 20% above a year ago, which is very impressive. South America is off to a very good start on their crop. Obviously, a long ways to go in that growing season. So those are the macro factors, I guess, to watch on the soybeans. As far as corn, ethanol production, last week was the biggest production week ever in ethanol production. Very good margins in ethanol right now, even with this falling energy trade. The production number on corn is still going to be talked along with soybeans. We will not get an update on that till January. But as I mentioned, the very strong export sales and shipments on soybeans has had more of a negative impact on the corn, where corn exports are down 14% year to date, to the point some of the trade are questioning or wondering whether we'll see some slight reductions on corn exports going forward. A couple important dates to watch coming up. December 10th is the next supply and demand update. And then January 12th, that will be the supply and demand update, along with final production numbers, and also numbers from the first quarterly stocks report, which would be based on stocks as of basically now, as of DEES-1. So there'll be a lot of anticipation. We get a little closer to the time of that report. Key things moving forward on a day-to-day, week-to-week situation. South American weather will have some impact on these markets going forward. Obviously, the demand structure, as I mentioned, we're a fourth of the way through the marketing year, so the market will try to determine where we are with the demand structure, both in corn and soybeans, the good and the bad. And then last but not least, it seems like today is a good example where these outside markets come back into play. What's going on with the crude, how much impact that's going to have on the dollar. We also saw metals down extremely hard today, so continue to watch these outside markets. Going forward, in the big picture, from a production standpoint, it still looks like not only domestically but worldwide there's plenty of supply of both corn and soybeans. And I think from a marketing standpoint, as producers need to keep that in mind going forward. Basis continues to be solid because of lack of movement. End users are still having to kind of play this thing hand to mouth to some degree, just because there's plenty of crop out there, but the availability of it is still somewhat limited. So moving forward, movement, infrastructure, and will be key to the cash markets going forward. With that, we hope everyone had a very happy Thanksgiving. We're in that holiday season where it's good to spend time with family. The Christmas holidays are right around the corner, about 4 weeks away. And with that, if you have any questions, feel free to call us here at the office in Cedar Rapids. Phone number is 800-373-2525. Check us out on the website at BISCommodities.com. You can see that at a glance chart I mentioned earlier there. So with that, everyone, have a great weekend, and we will talk to you next week.